Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you one example of a morning gap trade from this morning that worked out picture perfect. You see the sneak peek on the screen. It was in MYL Mylan Labs. We'll get into the chart in a minute and I'll show you exactly what happened with this trade. But first, let's understand exactly what we're doing here. Day traders need opportunity. In order to find opportunity, we need stocks that are moving. Stocks that are moving at the opening bell create opportunity for traders, but they create the real opportunity for traders that can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. So in my course at LazyGapTrader.com, traders learn everything they need to know in order to trade the gaps successfully. What criteria are we looking for? Which stocks does this work the best with? How do you trade them? What type of stop loss limitation are we using? What type of profit target do we need to have on? What type of volume on these stocks are we looking for? How much of a gap higher or lower do we look for in order to qualify for one of our morning gap trade opportunities? And the holy grail, which is how do you calculate the specific price level where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. All those things and a whole lot more is taught in the course at LazyGapTrader.com. The other thing I do is give traders who want them an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. Now this morning, we did have 6 potential gap trades on the board, but the reality is volume out in the market is very light and there's not a ton of stocks moving at the opening bell. That will change, but right now we're in a bit of a lull. However, we do look for opportunities. We did find 6 potential opportunities, and out of this list of 6, one stock hit our specific price level that we identified, and that was MYL. Now keep in mind that we're only interested in taking the trades when a stock comes into the specific price level that we calculate, that traders who have taken the course learn how to calculate on their own. Keep in mind, every number you see here are numbers that traders who have taken the course are able to calculate on their own. Let's get into Mylan. Gap higher, resistance levels are $41.39, $42.90, and $44.60. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. Keep that in mind. We're going to discuss that further when we go back to the charts. The other thing we keep in mind is when I say resistance levels are, and I give 3 price targets, this is a particular trade where a stock is gapping higher, it's trading up into resistance. We're looking to take a short trade at that point. The stock is likely going to pull back or go lower away from that price. I give 3 particular price targets on Mylan. These are 3 separate and independent trades from one another. We are expecting a price reaction at each of these numbers. There are plenty of days where a stock will hit multiple price targets and produce profitable trades all in the same day. So just wanted to make sure that we understand everything we're looking at on the screen. So we're back on the chart of Mylan, and let's explain exactly what happened, what we're looking at, and how we approach the trade. So yesterday, Mylan closed down at $38.48. The stock was getting a lift higher at the open, so it was gapping higher. So because the stock was gapping higher above a certain amount, it comes up on our radar screen from our morning gap trade scan. And of course, the parameters are all found in the course. So we know that it's one of our potential opportunities for the day. Now, if we can find specific price levels where this stock, if hit, should have a price reaction from in the other direction, that's a trade we would be interested in taking. Why? Because it's a high probability trade. So applying the exact techniques discussed and taught in the course, we calculate the specific resistance areas that we would be willing to take a trade. Now, as a result of this, we know that if the stock gets to one of these resistance points, there's a high probability we'll have a price reaction in the other direction. These are the high probability trades. These are the only trades that we're willing to take. So as you can see, the stock traded up to the $41.39 area. It spiked through it by just a little bit, making a high of $41.60, just 21 cents above the entry price. So we're in the trade on the short side, looking for a pullback away from $41.39. As you can see, the stock has already made a low this morning of $40.46 for almost a dollar gain in just a matter of minutes from the entry price. Now, in the course, traders learn exactly how to get the most profit possible out of these trades. Traders learn how to take trades like this, turn them into risk-free, emotionless trades, which enables them to squeeze the most profit possible out of these trades. Here's the most important thing that traders learn in this course. They learn the why behind this strategy. Once traders understand why this works, they have a different expectation of what's going to happen at these price levels. Therefore, they have a different comfort level when entering these trades. You're removing a lot of the guesswork away from trading. When you remove guesswork out of the trade and you add back in confidence because you have a certain expectation of what should happen at these price levels, those two things together is a recipe for success. Remove guesswork, add confidence, find success in your day trading. If you want to learn everything there is to know about trading the gaps successfully, please come over to check out the course at lazygaptrader.com. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.